Hey traders, Nick Shane here looking at a move in Apple today, which is kind of a fun thing to watch during the day and see if I can do a play-by-play with a replay of the actual ticks. And then at the end, there's also a what not to do when something out of the blue happens. So just to recap, today Apple came out of the box swinging and then it faded a little bit, then powered ahead, and then boom, out of the blue, somebody pulled the rug out. Coincided, I don't want to blame them, but it's CNBC. They brought two experts that pooped all over Apple, and in fact, one of them said that Tim Cook should resign. Now, I agree. I don't like Tim Cook, but it was kind of like they knew this was going to happen, and CNBC is in the business of news and flash headlines, and anyway, they knew it was going to happen. Good job. They did their work. All right, so here is Apple. Let me see if I can set it up. I don't do this often, so it might take me a second. Hold on. So if I don't mess it up, it's going to start from the morning. So this was today's open, and then Apple rallied, faded a little bit, then boom, power buy, took it to another high for the day, and then out of the blue, I paused it. Hopefully I did. Yeah. Somebody pulled the rug. And it was like one giant candle with a tail behind it. So if I was long Apple and I was seeing that happening, oh my gosh, what do I do? Do I panic? Here's what I can take out of this. First of all, over here, I booked longs. I literally booked longs. I shared it in a chat room because I had them. I was a little bit nervous about the calls going into an event. I have no edge on tomorrow. These experts were talking. Oh, they're going to introduce this. I have no idea what they're going to say. And more importantly, I don't know what the people are going to do when they hear about it. And so I said, you know what? I'm going to get out. I booked the longs. I had some credit put spreads that were winners out to October. I said, I'm 90% of maximum gains. I'm just going to book them. Literally minutes later, this happens. It's not that I was a genius about it. That was the proper thing to do. I just had good timing. But here's the lesson and what I could do if I was still in the longs. All right, so let's say I wasn't fast enough to catch it, and then I saw this stuff happening. Do I panic out? First of all, it all depends on the time frame, the investor time frame. By the way, the market's still open here, so I may have to go. Let's say it fell to here, and then it rebounded, and then it fell to here, and I didn't catch it. And I come to my screen, it's like, oh my gosh, what the heck happened? I had greens. Do I panic? Do I buy puts? Do I exit? Okay, so if I still had my longs and this had happened, I would have stayed in my longs. And I'll tell you why. Because, first of all, it almost closes a gap here. And second of all, it's unexpected, and I have information from prior action. It's not like we existed here and not below. So there is price history at this level. So I look left. I could say, okay, they tried to hold here and failed. So what happened before that? This is Friday. So clearly, this is an important part, right? If I go further back, clearly an important line. I'll go further back to see. So just from this picture right here, just from this, tells me this is a contention, line of contention. So whoever fought here and here and here, they're going to fight again. That, by definition, is going to create congestion. So the machines will see the level. Oh, last time I did here, last time it was here, I did that. Boop, boop, boop. Machines get up, start fighting again. And it bounced. I can't tell you that this won't happen, but I can tell you that this is not the place to get out because of this history. And if I wanted to sit it out, this is an even more telling sign that they tried to push through. So resistance. Okay, you can put an R here, an R, and then finally today they broke through it. This is a short time frame, 5 minutes. Every candle is 5 minutes. This was normal. This was normal. So far, the price action is very normal. Now, what happened is the headlines expedited matters. So let's see if we can, extend this lesson on a different time frame. So I'm going to go to daily and then zoom back in. So this is a daily chart with all of my markings on it. Clearly, there's a little gap here, so that's danger. A pitfall potential. And today's candle is indecisive. Duh. But look where it's indecisive at, in front of this candle here. I'm going to zoom into 240. So now we're looking at 4-hour candles. This is today's candle. It's indecisive. They tried to rally, they tried to fall, and they're right where they opened. But look at where. This is the edge of the breakout box. This is a box where they've spent quite a few except for that, whatever the heck that is. So they came back into it, and now they're trying to break out. This is a tall order for bulls short term, but not really long term. I think there's this in play, this weekly thing going on, but we don't know if that's going to play out, so I'll take it one level at a time. Back into the daily. This is a daily where most everybody is used to looking at. I'm going to zoom in on it. So that's the candle I'm interested in where today is. If they close above it, then the reins are still in the hands of the bulls, meaning there's no reason to get out of Apple for as long as they maintain a higher low, higher high trend within a weekly uptrend. But, you know, the whole market is so close to all-time highs that by itself creates some downside. But today's lesson, really, not lesson, I'm sharing my opinion, not so much how to trade Apple, but what not to do at the wrong time. So if I close in on the 60-minute, an hour chart, you can see how earlier I replayed and I said the level. So this is on a shorter time frame. We can have the same conversation, even more intelligently, because look at this. So I said this is not the place to get out because of this action here and this action wasn't into view because it was too close. And look at this whole mess right here. So talk about having R throughout, and then suddenly they poked above it, coming back to test it as support. Now this is like the most important thing I just said, by the way. So if I'm long Apple, I stay long for as long as this is holding as support. And it's not one hard line in the sand. Sometimes it is. But onus is on the bulls to prove they can use it and do this. That's a tall order into an event tomorrow, which is just hours from now. So, you know, tight hand, tight leash, so to speak, on the longs in Apple. I got out of mine. Maybe I'll reconsider some. I don't know. I am long some other stuff and hedged some other ways. I don't like this, and I don't like some technicians who are calling for lower prices in Apple. So they're you know, I think there's going to be a fight somewhere around 212-ish. Eyeballs a moving target to see who controls the reins. That's where the bears will try to take them away from the bulls. So if I wanted the hard line in the sand, today's battle zone would be it. But we shall see. All right, next signing out. Definitely longer video than I wanted. So, if you haven't subscribed yet, click on wherever the button pops up on your top left-hand corner, the free YouTube channel.